Is Workhorse a good long-term investment? And with that, welcome back to Investing for Generations, your channel for high-quality stock research for long-term value investor. So Workhorse stock is hot, hot, hot. Workhorse stock is a long-term winner with tons of fuel left in the tank. At least Luke Lango from Investor Place tell you this in this article, and I want to go through this article with you and then just show you if Workhorse, in my view, is a good long-term investment, which with a good risk and reward. And that's all about in the long-term investment. The thesis is that all transportation is getting electrified. The last mile delivery market represents a very big and highly attractive disruption opportunity in this electrification wave. Workhorse is a pioneering, best-in-breed solution to lead the disruption. And while WKHS has run up a ton in 2020, there's plenty of upside left in this name over the next few years because the last mile delivery market is huge, around 18 billion, and Workhorse is still a small company with a 2.7 billion market cap. So buy WKHS stock and hold it for the long haul. That's the thesis of Luke Lango. I will try to answer if he's right or wrong, at least in my view. And so let's go. So first of all, when we take a look at the chart of Workhorse for the last year, we see an immense rise of the share price. It went up to, in the peak, over $30 and now just come back to around $25, but overall immense run. And of course, then the question is it also a good long-term investment? And that's what's all about on this channel. So first of all, take a look at the good things of Workhorse on the positive side of Workhorse. And one of the positive signs is that Cathie Wood bought Workhorse into the RK portfolio. And there was a lot of videos and a lot of hype also here on YouTube. I talked about this earlier in one of my videos. And of course, this is positive because Cathie Wood in the past did some very good picks. And so maybe Workhorse also have a big potential. At least this could be a good sign. And then we see when we look at the portfolio of ARK Invest, Workhorse here is at number 12 with a weight of a little bit under 3% of the portfolio. And so you have to put this also in the perspective. 3% of a portfolio is okay. It's not that less, but it's even not a very big position in the portfolio. Just compare it to my portfolio, 3% of my portfolio is around $2,500. This we have to keep in mind that ARK Invest bought Workhorse, but it's not an immense stake of their portfolio. So don't make more out of it than it maybe really is. The other thing or the other bet with Workhorse is the upcoming USPS contract. A very big 6 billion contract. It seems like Workhorse is one of the front runners of this contract, and this brings a lot of fantasy also to the stock market and to the stock price. But nobody really know when there will be the decision over this USPS contract, and also nobody knows if Workhorse really gets the whole contract or just a part, and how big is this part. So there's also a lot of uncertainty with this contract. At least they are front runner, and at all there are just 3 companies left in this race. So they will get a share of that, but how big the share will be, nobody really knows. And then another good news for Workhorse lately was the Hitachi deal, and also this, of course, was positive. There are some positive news around this company. But on the other hand, we have to look at the reality and at the past and the current situation. And when we do this, and when we look at the Q2 earnings, the net sales was just $91,000 and the net loss was immense. You can see here, big net loss. In reality, this company don't earn money. They have barely a business They have barely sales. So this is a current reality, and all the other things are in the future and uncertain. And that we also see when we look at the EPS over the last 5 years, and you see they never made a penny, and so they just burned money so far. That's the downside, or just the reality right now, and for the past. And all the rest is just in the future, and it's just a kind of fantasy. Maybe it can become reality, who knows? And so we have, on the one side, just losses, no profits, and on the other hand, weighing very heavily a market capitalization of almost $3 billion for no profits. That's what we are handling here, and that's what we have to think about when we talk about Workhorse. And then, of course, we have to remember our question, can Workhorse be a good long-term investment? And normally, to value a company, I use the discounted cash flow method. But because Workhorse doesn't have positive cash flows so far, we can't use that. That makes no sense in this case. And so I will look at the market cap, share with you what have to happen that Workhorse could be a good long-term investment. And therefore we go back to the article of Investor Place, and there's a huge upside for Workhorse stock, given that the last mile delivery market is in oligopoly and that all of the major players will electrify sooner rather than later. It is quite likely that nearly 100% of the 350,000 delivery van market in the US is electric by 2030. If Workhorse naps just 10% of the market at 75,000 average prices and 15% operating margins, then my modeling suggests that net profit should round out to 300 million by 2030. A 20x multiply on that implies a potential future valuation of 6 billion, more than double today's market cap of 2.7 billion. Even here in this thesis, we have a lot of uncertainty, of course. Nobody really knows if really nearly 100% of the delivery market will be electrified by 2030. So that's uncertain. This is just a guess. But even if we follow this, and even if we say it will be, and Workhorse get the 10% share of the market, with this prices and this operating margin, and there will be really a value of 6 billion in 2030. This sounds a lot, and the doubling sounds a lot in 10 years, but a rise from right now 2.6 billion to $6 billion over 10 years is a yearly return of 8.7%. And the question becomes, with this high risk and a lot of uncertainty and just fantasy so far on the one side, and maybe reward of 8.7% per year, is this a good ratio? Is this a good ratio between risk and reward? I think it's not. But let's say Workhorse naps 20% market share. Then we are talking 600 million in 2030 net profits and a future valuation of 12 billion, up more than fourfold from the Workhorse stock price today. Either way, there's still plenty of fuel in the tank. But even if we take the second scenario and then a valuation of 12 billion in 10 years, even then you come to a yearly return of 16% from the current stock price. As I said before, with this high risk and the high uncertainty, with the company that never make a penny so far on the one side, and then on the reward side, maybe if everything goes well, 16%, that's for me no good risk and reward. But yeah, of course, you have to decide by yourself. And then also we have to keep in mind that, of course, it seems like Workhorse right now is a front runner in the last mile delivery market. But if this market is really that big and become that big, you can be sure that other companies will look into this market too. And in the whole EV market, there are a lot of players. Right now, we have over 1,200 electric vehicles and more than 300 auto brands who works on electric vehicles. And after the big players in the automotive market sleepwalked really for a decade or maybe two on this, the race just begun. And you can be sure there will be in the whole EV market a high competition. If this market of the last mile delivery is really that big, you can be also very sure that also in this market there will be a high competition. And so I'm not that sure that Workhorse at the end really can get a market share of 20% or even 10% as suggested. And so Workhorse for me is interesting for sure, and there are some really good signs and positive signs, but at the end, it's a gamble. And as I tried to explain, even with the positive scenarios, there is not a high reward to expect. And so, overall, for me, Workhorse right now is at these prices, especially, is not a good investment and can't be. Even in the best scenarios, it can't be a good investment. That's it for today. If you liked the video, give me a big thumbs up, subscribe to the channel and ring the notification bell, and join this community of long-term value investors. We are close to reaching the 400 subscriber mark and I'm very happy about that. So join the group and find high quality stock research for long-term value investors once or twice a week on this channel. See you soon. Bye bye. Take care.